On Divergence, you can trade Spear tokens that represent binary calls. What are binary calls? Here is a quick explainer. First of all, let's see what happens when you buy a conventional call. You pay a premium for the right to receive theoretically unlimited upside above your strike price. At expiration, you get paid the difference between the settlement price and the strike price of your call. When you sell or short a conventional call, you are obliged to sell the underlying asset at the strike price during settlement. In theory, your risk is unlimited. Your max payoff is the premium you receive. A call is sometimes expensive to buy. Traders commonly buy a call and sell another call at a higher strike when they are bullish. By giving up unlimited upside, they pay a lower premium out of pocket. This bullish call spread reaches its max value when the underlying rises to this higher strike. Now, let's see what the payoff looks like when the two strikes of this call spread become so close as if they merge into one. We have a payoff structure of a binary call. A binary call can be mathematically treated as a special call spread. When buying a binary call, you give up unlimited gains above a strike price for a fixed payout. Everything else being equal, you are able to pay a much lower premium for a non-linear reward. And you will know your risk-reward before a trade. Sometimes this risk-reward can be better than buying a conventional call outright. Anyways, we hope to see you soon trading on Divergence, and if you have any questions, head over to the Telegram or Discord and we are happy to help.